Hey, DB, how you doing?
I'm doing great. How are you?
Doing good, doing good. Thanks for taking a couple of minutes. I appreciate it.
Yeah, no, absolutely. I know this is it's new and sometimes can be a little bit overwhelming. So let's try and break this down in a way that you can understand it.
Okay, awesome, awesome. Obviously, I contacted you because I watched some of the free videos on the website, with basically the follow your trades type stuff, and they're awesome videos, but I didn't feel like I had enough knowledge to make the commitment to get started. And I mean, obviously, as a trader, I've been trading for a while. It's not a question. I understand what I'm looking at on the screen as far as a chart and something that looks similar to to regular candlesticks, but I don't understand fully enough at this particular moment what's going on here. I mean, clearly there's so much more going on here than just candlesticks, and that's what's got me so excited to want to get to the point where I reach out. I normally don't do that. I usually just handle it, figure it out on my own, but I'm excited to take the next step, but I just want to make sure I understand what I'm looking at, if you don't mind.
Yeah, no, absolutely. And I know a lot of people go through this. You're not an isolated case. I mean, when I sign up for something online, I generally just want to muddle through it, and I want it to make sense. And, a lot of times that's just not the case. And in this particular example, I mean, we're looking at a lot of data that even longtime traders really aren't aware of, so to speak. I mean, you get in the habit of just looking at what's been presented to you and thinking that that's the entire universe. And in reality, there's a lot of data beneath all of the charts that traders are used to looking at. And what OFA does is just try to bring that out. So let's pick a point to start. I know you said you looked at some of the trading videos. I mean, the idea behind those are that we have a course for people to watch and kind of start to get the foundation of what's going on. But once you're looking at kind of the trading videos, you almost need to have that as an underlying foundation.
Yep. So I guess we can focus on, obviously any average trader can look at that and see a trading range and then a breakout of the trading range. But before we do that, I wanted to bring up something that you had mentioned in one of the videos, which was the difference between standard candlestick charts only giving us 4 points of data, and then, obviously what you had in one of the free videos, this is the whole point I didn't understand. You said there's a lot more data, and literally all of those trades that happen within that candlestick, and most of us, myself included, obviously that's why I'm on the call right now, is I only look at the open, the high, low, and close, but from it appears the OFA software is telling me a lot more than just the open, high, low, and close, and I'm assuming that's what the colored portions of the candles are?
Yeah, that's certainly a layer of it, and the idea is that if you were to break down these periods, you've got thousands and thousands of trades in any given period, and what we're trying to do is isolate all of that data in a way that it starts to make sense, so that you can look at as much or as little as you want. And what we want to do is are kind of create a hierarchy of what we believe is the most important next step. And so, as you said, you've always taken the approach in a normal period that you have four basic points: the open, high, low, and close. And if we were to strip all the colors and everything off of this chart, that's exactly what you would see. So think of it in terms of the first step is that we need to add just a little bit more depth. We're not really trying to get to a third and fourth dimension here, but we want to add a little bit of depth to the chart. So when we have these individual blocks that are kind of colored, and you can see the red and the green and the gray, and traders get excited about colors a lot of time, and we have a lot of software that green means buy and red means sell, and people get excited about that. What we're trying to do here is to isolate a few more points in the actual period. So what I'd like to do is just kind of let's back off of the colors for a minute and just kind of dial into just one of these periods. I'm just going to pick this big green one that's right here. So in this period, what we're saying is that, yes, there's an open, high, low, and close. And I know a lot of people are used to candlesticks being green or red. We kind of, because of the actual depth that we're providing here, we like to simplify that and say, well, because the wick is green, that means that this is an up bar. And if you can kind of take that approach, then you could say that, well, down at the bottom we have the open, and then we have the low, and we have the high, and we have the close. And so just kind of forget about the big green block in the middle of it and realize that just like any other period, we have an open and a close. And because the close is higher than the open, it's an up bar, so what you would normally color green. Well, where we use the color shading is when we start to isolate where we think really important volume is. And it's you kind of have to take the approach of, well, when you say we think it's important, why is it important? Well, inside this period, there were a tremendous amount of trades. And at some point, there was a very high concentration of trades. And as a trader, I'm most interested in where the most people did business. And the reason is because in any situation, you're going to have buyers interacting with sellers and sellers interacting with buyers. And at some point, one side is going to win, right? We're going to have a move in one direction. And obviously, if you were a seller and the market moves up, that puts you in a precarious situation where you're probably dealing with a potential stop out, or at least you're very frustrated. We've all been there. If you're the buyer, then you're on the right side of the market, and knowing where those buyers were profitable from can be helpful, and also knowing where those sellers are stuck upside down can be very helpful. And so what we've done is we've built a way into the period to isolate where the majority of volume took place. And so in this particular period, these three price levels here that are shaded in green represent what we call a cluster of volume. In other words, if we were to open this period up and look at where all the trade took place, we would be able to isolate that down to where did a majority take place, where did all of it take place, and where was there the highest concentration. And in terms of profiling lingo, we call that the point of control, the single price which has the most volume concentrated in it. And that's represented by the darker color here. So the dark green in the middle of the single price, that is the price that had the most volume. But you can notice in some of the other periods, this one only has two, this has two, this one has four prices. Basically what happens is if you were to just isolate a single price, you can imagine in a very large move, that might be just a very small data sample. And so rather than just saying, well, the one price that has the most volume, we want to look at a high concentration. And we've got some algorithms that do that for us. And so what we're looking at is in any given period, we can see where the most bundled concentration of volume is. And so those outlier prices, other than the point of control, are shaded in a slightly lighter color. So here we can see two around the darker green, and here we can see two above the red and one below. And some of them only have two prices. This is another one with four. And so it really is left up to the math to determine the number of prices that make up that cluster. But it's all about finding the heaviest chunk of volume. So right there, we've already added a couple of pieces of depth to the candle. Right? We're no longer just looking at the open, high, low, and close. Now we're looking at where the most traders did business. And in terms of market profile and volume profile, whenever we've got a point of control, we call that the fair price, so to speak. That is the one price where the most buyers and sellers said this was a good place to do business. So here is where the sellers thought this would be a good place to try and sell off. And here is where the buyers thought this would be a good place to engage for a breakout. Does that help make a little bit more sense out of the data that we're looking at?
Yeah, that was actually probably one of the biggest reasons that I had reached out, because as I was starting to look at the charts, I'm visualizing, and let's just use this one as an example. Let's say that's a large green candlestick in traditional candlestick, and let's say it has volume on the bottom, and just for argument's sake, it has a big volume candle. When I was watching your videos, I'm visualizing myself trading under normal candlesticks, for lack of a better way of putting it, and I'm saying to myself, well, this could be a giant green candle that traded 100 shares at the top. It looks like a monster candle, but it's really not, because nothing traded at the top. So that's really what got me the most. I actually started to feel like I was trading blind, because a traditional candlestick and volume chart aren't telling me the same thing. That's actually what I wanted to know. I was like, I wanted to make sure I'm hearing that right. It was profound.
Well, you're hearing it right, and that's a lot of what we do by just isolating where that high concentration of volume is. Will start to make the candles just generally make a lot more sense. And this is a good example of a candle that starts a trend breakout. Generally, when we see a trend breakout, it's because we have a high concentration of volume down at the lower end of a candle where there is a stress point. It's kind of like beating your head against a wall over and over and over, and that's what the buyers are doing. There was a wall here of sellers who didn't want to let the market break. And when they finally relented, when they finally said, okay, that's it, the buyers have overcome here, there's more buyers than sellers, well, the buyers have a quick breakaway, right? Because there's volume now that's coming in on the buy side, and there's nobody on the other side of it trying to stop that upward action. Well, when that happens, the market naturally will expand, but then it generally has to retrace a little bit, which is what we see here. So from the high of this, there's almost no volume in the top, so the market's able to come back down a little bit, kind of snap back and reabsorb for another buying effort. So it is kind of like you're trading blind when you're not looking at where the volume concentrations are.